This is the most important line in the global economy right now. This isn't just a stock chart, it is a load-bearing wall. As of late 2025, NVIDIA isn't just a tech company. It has become a systemic variable for the entire United States. It is the engine behind your pension fund, the S&P 500, and the entire market sentiment. But there is a massive crack forming in the foundation, a $5 trillion house of cards built on a single fragile assumption, that OpenAI will keep winning. But what if I told you the math doesn't work? That a circular economy of recycled revenue is the only thing propping up this valuation? And worse, what if I told you that to save the US economy from a total collapse, the government is quietly preparing to do the one thing they promised never to do: sell their best technology to China? Now, before we look at the secret 15% deal that could save or destroy your portfolio, I need to show you the cards everyone else is hiding. And just a quick disclaimer, I am not a financial advisor. I'm just a guy on the internet who reads boring financial reports so you don't have to. I'm not telling you to buy or sell. I'm just showing you the data. This is for educational purposes only. Now watch closely. To understand why this is a bubble, you have to understand where the money comes from. The AI bubble theory posits that NVIDIA's revenue isn't coming from real-world businesses yet. It's coming from an arms race among just 4 companies: Microsoft, Amazon, Google, and Meta. Let's look at the math. It's what we call a closed loop. Microsoft invests billions into OpenAI. OpenAI uses that investment to buy cloud credits from Microsoft Azure, and then Microsoft Azure uses that exact same capital to buy H100 chips from NVIDIA. It's a circle. This looks exactly like the vendor financing models we saw during the dot-com bubble of 2000. Back then, telecom companies lent money to startups just so the startups could buy their equipment. It looked like revenue until the startups went broke. And here is the kicker. It's called the $600 billion question. To justify the amount of money being spent on data centers right now, the AI industry needs to generate $600 billion in new annual revenue. But right now, the actual revenue from AI software is a tiny fraction of that. We are building luxury hotels in the desert hoping tourists will show up. If OpenAI doesn't figure out how to make a massive profit soon, Microsoft stops buying chips. And if Microsoft stops buying chips, NVIDIA's revenue evaporates. But the circular economy isn't even the biggest risk. The biggest risk is that NVIDIA's best customer doesn't want to be a customer anymore. We need to talk about the Google threat. For a long time, NVIDIA had a monopoly because of their software, CUDA, but the sheer cost of these chips has forced big tech to innovate. Enter the Google TPU v6, also known as Trillium. Think of it this way. If you want to drive to the grocery store, you don't take a Formula One car. It's too expensive and uses too much gas. NVIDIA chips are Formula One cars. Google's TPUs are electric delivery trucks, efficient, cheaper, and built for one job. Recent data shows Google's new chips are 30 to 60% cheaper to operate than NVIDIA's. This is the Snapchat versus Instagram moment. Remember when Snapchat was king and then Facebook just copied their features? Reports in November 2025 suggest that Meta, Mark Zuckerberg himself, is in talks to use Google's chips for their internal workloads. That is a $70 billion betrayal. If the hyperscalers switch to their own custom chips, NVIDIA's left selling to the little guys. And the little guys don't have trillion-dollar wallets. So let's play out the worst-case scenario. Let's say the bubble bursts, NVIDIA misses earnings, the stock drops 50%. You might think, I don't own NVIDIA, I'm fine. You are wrong. You are exposed. As of late 2025, NVIDIA and just 20 other stocks make up 50% of the entire S&P 500. This is more concentrated than the peak of the dot-com bubble. If NVIDIA crashes, it drags down the index, which drags down your 401k, which drags down pension funds like the Oregon Public Employees Retirement Fund. This creates a liquidity vacuum. When a stock this big falls, passive funds are forced to sell everything else to rebalance. A 50% drop in NVIDIA wipes out trillions in household wealth. People stop spending, businesses stop hiring. The AI crash becomes a real-life recession. The US government knows this. They know that NVIDIA is the load-bearing wall, and that is why we're seeing one of the craziest geopolitical pivots in history. I call it the geopolitical put. For years, the US policy was simple: starve China, don't let them have the chips. But that policy has cost NVIDIA about $15 billion in lost revenue. Now, with the economy wobbling, the White House is changing their tune. According to new reports, the administration has brokered a deal. They will allow NVIDIA to resume sales of certain AI chips to China, specifically the H20, in exchange for a 15% revenue share paid directly to the US Treasury. You heard that right. It's a bailout disguised as a tax. They are reopening a $50 billion market to keep NVIDIA's stock price up. They are choosing economic stability over national security purity. They are effectively saying, we will arm our rival with AI chips because if we don't, our stock market will crash. But here is the ultimate irony: the magician's prestige. Even if the US government panics and lifts the ban to save the stock market, it might be too late. Because we banned NVIDIA chips, China didn't just sit there. They innovated. Huawei is now mass-producing the Ascend 910C, a chip that matches the NVIDIA H100 in performance. They plan to make 600,000 of them in 2026. We forced them to build their own supply chain. Now Chinese companies like Tencent and Baidu prefer the domestic chips because they know the US supply chain is unreliable. The China bailout might not work because China doesn't need us anymore. So what happens next? We are watching a game of chicken between the executive branch and Congress. There's a bill called the Safe Chips Act that tries to block this 15% deal. If that act passes, the bailout is dead and NVIDIA is in trouble. If the deal holds, NVIDIA gets a revenue floor and the bubble deflates slowly. The AI bubble isn't just about technology anymore. It's about politics. And in an election cycle, the economy usually wins. I know which way I'm betting, but I want to know what you think. Would you trade national security to save your portfolio? Let me know in the comments. Thanks for watching, and I'll see you in the next one.